I am of the belief all these fintechs are bottoming in this quarter we're in right now, right? And I am of the belief that fintech is going to be the undertaker in 2024, meaning it's going to come back to life. I mean, if you had to force me to answer that question, am I bullish or am I bearish on Tesla just for the next 12 months? He has lost money. He just basically admitted he's lost money going against Tesla for the last 5 years. They always, oh man. Howdy, folks. Hope everybody's doing good. Hello, chat. Howdy. We got earnings about to hit, folks. Woo. So what did they have going on here? So GAAP results, revenue came in at $493 million versus $395 the same quarter last year. It's a 25% increase in revenue, which is nice. Net income went up substantially, all the way up to $39 million versus $16 million. That's on a GAAP basis once again. So it's impressive. If we look at non-GAAP numbers, 200 mil of adjusted EBITDA versus 163 in the same quarter last year. Non-GAAP net income, 167 million versus 129 million. Those are pretty good numbers. I'm guessing just maybe people are expecting a little too much. Customer retention remained over 95% during the third quarter, and it has for the past 9 consecutive quarters. Okay. So financial guidance, revenue of at least 580 million, adjusted EBITDA 270. So let's see where the street was at here for Trade Desk. Maybe the guide scared them or something. Maybe that's what it is. Let's see here. Let's see. Earnings estimates. So looks like the street was expecting, we need to go to quarterly. The street was expecting revenue of 611. Yeah, so that's where the trouble is for Trade Desk. Street's at 611. Trade Desk says we're going to do at least 580, but is that like 585, 590? If it is 595, if it's something like that, it's obviously significantly below. And I've never really seen a company say we're going to do at least a number. That's a weird way to put it. Usually companies give it a range. They say, we're going to do 580 to 612 million or 615 or something like that. Like the fact that they just said revenue of at least 580 is so weird. So weird. So no bueno. And like I said, in this market, you can't freaking come and miss. And you look at Wynn. They just came in and beat all their expectations, and the stock's down 4% after hours, right? As a gift to me as a long-term investor. But I mean, bottom line is you can't, if you miss your numbers or miss your guidance in this market, it's relentless. It will slaughter you alive. 27% down the stock is after hours, right? I mean, my gosh, down to $55. Will it approach that 52-week low of 40? Who knows? You never know, right? My goodness, that's just vicious. Absolutely vicious. Earnings alert, earnings alert.
The results for us, Steve.
Yeah, Morgan, this is despite a beat on the top and bottom lines, but it seems to be some weak guidance that's really driving the stock lower here. But let's go over the results for the Q3 here. Earnings were 33 cents a share adjusted versus the 29 cents the street was expecting. And then revenues coming in at $493 million versus the estimates of $487 million. But yeah, it must be this weaker than expected outlook for the current quarter that's sending shares down 27% here. They're seeing $580 million for the quarter versus the 610 the street was looking for, shares down better than 27%, Morgan.
Yeah, it's a huge move. Steve Kovac, thank you.
Sure,
after the break, there's a new weight loss drug in town. Eli Lilly getting FDA approval to use its diabetes drug as a weight loss.
So it says Trade Desk is still trading at like 50 times 2025 expected numbers. Let me go take a peek here. Take a peek at kind of where we're at here. So, yeah, 53 times 2024 numbers. But the company does have impressive growth, right? So it is something to kind of keep in mind. So there's no doubt the stock deserves a premium over the average stock in the market, given the growth rates this company has. Does it deserve that big of a premium? I don't know. I think that's up for debate, and that's something I'm going to probably have to dig into over this next few days or next few weeks and see, like, maybe it's an undervalued stock. You never know, especially after this come down. Maybe we're trading at 45 times or 40 times expected 24 numbers. And if the company has significantly better growth, let's say a 4x, 5x, 6x type growth rate versus an average stock in the market, then you can say it's maybe undervalued. But I don't know. I got to do digging here. Stock down 28%. I'll see what's going on there. But damn, man, that's a big move there. Looking forward to the win call here in a moment. We'll definitely listen to that, baby. Now, I'm looking forward to listening to this win call here in just a bit. Stock's down after hours. I don't think the market has any patience for any of these travel-related companies. It's what it is right now. Ooh, Unity down over 10% after hours right now. So Unity's getting hit. This is a Kathy Wood stock, if I recall. Damn, trade desk just crossed under 55. It's in the 54s now. Down 28.5 percentage points at this point in time. Jeez. What a move. What a flippin' flapjacking move. My goodness. You should buy Hood. Really got hit. I might start a position in Hood. We'll see. We'll see. I am of the belief all these fintechs are bottoming in this quarter we're in right now, right? And I am of the belief that fintech is going to be the undertaker in 2024, meaning it's going to come back to life. And so I think there's going to be a lot of upside to a lot of those stocks. And, maybe I make a move on the Hood. We'll see. Coinbase is up because of Bitcoin. Yeah, Bitcoin's been incredibly strong. Does it hold up? I don't know. But it has been incredibly strong. I've been very impressed with Bitcoin's just performance. Trey Cobb says, Honest was up over 30% at one point today. Yeah, I mean, if the market didn't fall to pieces, it probably would have been up over 30% today. It probably would have been one of those sorts of days. So, here's Unity.
$44 million versus the $553.7 million expected.
They missed. You can't miss in this market.
You tumble even more here. Not giving guidance for this quarter.
Damn.
Talking a little bit about, quote, a comprehensive assessment of our product portfolio. So it sounds like they're going over quite a few things now after losing their CEO last month. Interim CEO Jim Whitehurst.
That one could get hit a lot more.
The CEO of Red Hat, which was bought by IBM. Now,
I wouldn't be surprised if that one gets hit 20%.
So it sounds like they're doing some reassessment of the business here, therefore not giving guidance for the quarter.
Scary.
Down 11% now, Morgan.
Yeah, perhaps not surprising, but some big moves here in overtime. Steve Kovac, thank you. Wins earnings call is kicking off in just a few moments. After the break,
we'll be on it.
An analyst what he wants to hear.
We'll be on the call live in 2 minutes here, hearing what's going on in Vegas, what's going on in Macau, what's going on in Boston, what's going on in travel in general. I'm really excited to hear this win call. Really, really excited. But damn, man, these stocks are getting pounded. We spoke about Eli, Topgolf. It's pretty ugly short term, no doubt about that. And if there's a recession, any job losses, it will be uglier for Topgolf in the short term. But that's exactly why I'm looking to potentially build a position, keywords potentially, in 2024. So, it's always possible Topgolf could go to $5 to $7. It's a potential. The number of stocks that plummeting each day, roughly, despite even good earnings, is shocking. Yep, just very weak, a lot of weakness in the market. Okay, they're about to start this call. They're doing a little warm-up part. This is going to be really intriguing. We're going to find out what's going on in Vegas, Macau, Boston, travel. So, somebody asked, how does interest rates affect discounted cash flows? A lot of times by the end of the discounted cash flow toward the bottom, they'll divide it out by whatever the interest rate is. So the interest rate's 1%, they'll divide it out by 1%. If it's 5%, they divide it out by 5. So it can completely change folks' numbers in regards to that. So something to kind of keep in mind there.
When Las Vegas delivered $220 million of adjusted property EBITDA, up 12% on an incredibly difficult year-over-year comp.
That's true.
Yes, it was aided by high hold, but it was also despite the fact that we accrued during the quarter for the estimated increases associated with the new agreement with the Culinary Union. I got to tell you, activity at the property was frenetic during the quarter, with hotel occupancy, restaurant covers, casino visitation, table drop, and slot handle all up over what was a very strong third quarter of 2022. As a result of all that activity, we produced third quarter records in gross gaming revenue, food and beverage revenue, and hotel revenue, with 10% year-over-year growth in RevPAR.
Unity down 15%.
We continue to be at
Don't
the
be
top
surprised
of our
if you see
game here in Las
20%.
Vegas, and I'm incredibly proud of the team who continue to deliver to our exacting standards, even in the midst of significant customer volumes.
Vince McMahon's going to sell a bunch of his WWE shares.
With healthy GGR and strong year-over-year RevPAR growth during the month. Looking ahead, we have a strong pipeline of forward group demand, very healthy gaming market share, and a robust programming calendar with F1 and Super Bowl just ahead of us.
Higher than normal hold benefited EBITDA by around $12 million in Q3, and hold normalized adjusted property EBITDA was up slightly year-over-year.
Apple settled with the Department of Justice.
Was broad-based across the business.
Look at
Hotel
this.
revenue increased 10% year-over-year to $178.5 million, a new third-quarter record on the back of a 9% increase in ADR and 120 basis point increase in occupancy. Our other non-gaming businesses were strong across food and beverage, entertainment, and retail, all up nicely year-on-year. In the casino, our GGR increased around 22% year-over-year, driven by a 7.6%
GGR is gross gaming revenue, for anybody that doesn't know.
And a 6.5% increase in table drop, along with higher table games hold. OPEX, excluding gaming tax per day, was $4.1 million in Q3 2023, up 14%.
We'll come back to this in just a moment. CFO is just going over a lot of numbers here. By the way, it makes sense that Vince McMahon wants to sell. I don't know if any of you guys used to watch wrestling back in the day, man. The Attitude Era, that was my era. That was the best. Stone Cold and Degeneration X and Undertaker and Kane and all those people, man, it was crazy back in the day. But anyways, he wants to, I guess he's going to sell a bunch of his WWE stock, which makes sense. The dude's like, I think he's in his 80s now. I want to say Vince McMahon. So, you start getting those ages and it's like, you got a position for other things, right? It doesn't really make sense to just keep all your money in a stock. You want some cash. You want some money to play with. It might make things easier, for transitions, for inheritance and things like that. So it makes sense that, he wants to unload. And that'll happen someday with Elon Musk, by the way. That'll happen someday with Jeff Bezos. Like, those guys will sell their stakes when they probably get in their 70s, 80s, 90s, whatever. So something to keep in mind there. If they make it, we'll see. Bezos looking buff, though. He might make it. I don't know about Elon, man. Elon's not always looking the best. Perfect. Before they get to Q&A, by the way, somebody said about net income. Net income, this is one of the few stocks in industries you don't really look at net income. You look at usually EBITDA, earnings before interest, taxes, depreciation, amortization. And the reason being is all these companies usually take, look at depreciation and amortization in the quarter was $171 million. Then impairment of goodwill of intangible assets was $93 million. Property charges and other was $114 million. So for these resort type companies, usually you look at EBITDA rather than net income loss. Most companies, like 95% of companies, it's the net income or net loss is what's important. For these companies, the wins, no one really looks at that. It's usually about EBITDA in regards to these guys.
And it's really too early to say. Honestly, when I think about everything we've done this year, and the list is extensive, I actually didn't expect it to pick up this quickly. The team has gotten incredibly creative and incredibly resourceful in terms of what they've done. And keep in mind, we do not yet have certain tools that our competitors have, like an arena or an event center. Now, that's part of our plan from a CapEx perspective and part of our CapEx concession commitments. And so we'll catch up in due course. But it's really too early to say what the seasonal cadence will be, because some can be done only outside of typhoon season. Others can be done year-round. And it's also a little too early to say what the split will be between properties. I don't think it changes the investment thesis much. I mean, you're talking about a few $1 million here and there, but it's important in terms of fulfilling our concession commitments. And honestly, it's important if you do it right. It's important in terms of building your brand into that region, similar to what we've done in Vegas, frankly, with all the programming that we've done here. It's important for building your brand and for casino marketing.
Helpful comments. Thanks all.
Thank you. Our next caller is David Katz with Jefferies.
We're going to get into this in just a minute. Them talking about Tesla bringing down the whole stock market today.
Taking my question. I'd love just a little more color on how we think about margins going forward. I admit it's one of the aspects of the model where we've sort of spent more time and thought and try and get those, particularly in Macau, what a normalized margin could be and what the puts and takes are around that. Obviously not asking for a specific guided number, just some qualitative commentary. Thanks.
Thanks, everybody.
Thank you for participating on today's conference call. You may now go ahead and disconnect.
Okay, so that was Win Call. That was also Win Palace. I've been showing you guys a video here for the last 20, 30 minutes here, so you guys get an idea of Wynn Palace. That was Steve Wynn's last great creation. His last great creation before he left the company was Wynn Palace. I still haven't been there in person. I'm hoping to go in the next year or two. That would be cool if I could make that happen. Okay, so I want to react now to this. They're going to talk a little bit about Tesla and how it pulled down the whole dang stock market today.
Of Moses Ventures. We're going to get more at the end of the market's long winning streak and that dismal 30-year Treasury auction in just a minute. But we start off with the biggest drag on the NASDAQ 100 today. Tesla dropping more than 5%. Its worst decline since earnings last month. The stock nearly 30% off its highs of the year. The move coming after analysts at HSBC initiated coverage of the stock with a reduced rating, slapped it with a $146 price target. That's 30% lower than today's close. Add to that increased competition in China. Beijing-based Li Auto posting sales growth of a whopping 270% in its latest quarter. It also posted better profit margins than Tesla. The stock has well outperformed Elon Musk's company over the past year, but is China still an opportunity for Tesla, or are the hurdles too high to jump at this point? There are many people who have been bearish of Tesla on this desk. Danny Moses, this is your number one short here.
Yeah, it still is. I was here July 18th, I think, right before they reported their second quarter. And quarter was okay, but they did.
Him and Dan Nathan are about to go ham. That's all I'm going to say. Him and Dan Nathan are about to go ham on Tesla. Those guys hate it, especially Dan Nathan. He despises Tesla. He despises Elon Musk.
CFO stepped down prior to that and then missed those numbers. And I think now it's really become a show me story in terms of it's an auto company. And I think people are going to start to lose patience over time here for what this company is going to be over time. And so I don't think it was down that much because of the downgrade. I think it was an excuse. A lot of stuff going out there, Cybertruck delivery, et cetera. So I'm still short the name.
Isn't there something that we've learned from GM and Ford in their latest quarters, and that is the EV business is much tougher for even established OEMs? So why doesn't that bolster the Tesla story?
Sure.
They're the ones doing it and doing it profitably at this point.
The other side of that coin is they still make automobiles that people need to find. You're not walking into your local Tesla dealership and saying, here's 65 grand, give me my car. You still have to finance these things. And
Exactly.
even Elon Musk talked about higher rates being a bit of a drag. And we can't do this, I understand. But if you were to back out that $103 print from December of 2022 and just looked at this move from October of 21 to where we are now, stock's down 50%. And it's not coincidental that it top ticked right before the Fed started to raise rates. So say what you want. Company now has cut prices 6-7 times. Margins are going to be impacted, and I think we're starting to see it now.
Yeah, I think that's really the central point. What part of their story was their margins were unlike anybody else's, and so it traded on this really high multiple. So if those margins compress, that margin.
Hey, anybody in the chat own Tesla stock? Any Tesla shareholders watching this right now? I'm kind of curious if there's any Tesla shareholders watching this, other than me. I'm a Tesla shareholder.
Part of their story was their margins were unlike anybody else's, and so it traded on this really high multiple.
Got some
So if
Tesla
those
owners in the
margins
house.
compress, that multiple should also compress, and you get this sort of double whammy. And I mean, we're talking about,
Okay, and let me ask all you guys, because there's actually a decent amount of you guys that own Tesla stock that are watching this right now. Are you guys bullish or bearish on Tesla just for the next 12 months? I'm not talking about the next 12 years, next 5 years, just the next 12 months. Are you bullish or bearish on Tesla for the next 12 months? Love to hear your guys' 2 cents and opinion if you guys are bullish or bearish. A few of you guys are bullish for the next 12 months, but most of you guys are bearish. I mean, if you had to force me to answer that question, am I bullish or am I bearish on Tesla just for the next 12 months? I would say bearish. But I would say specifically I'm more bearish for the next 6 months. I'm a little more confident in the next 6 months of being bearish. You know, because in the back half of 24, you know, by that time you could have Cybertruck really ramped up. The Fed could be talking about cutting rates, which a lot of people would look at it as a positive for anybody that sells, you know, stuff that you got to buy on a loan, which is a la Tesla. So you could actually have some good things coming into Tesla in the back half of the year. But interesting. I enjoyed kind of hearing your guys' opinion.
slowdown in general as well, and then just rates higher, multiples low.
Yeah, it's interesting. So looking through this very detailed report from HSBC, I think this is the most important point. Almost half of our discounted cash flow valuation of Tesla comes from businesses that will not generate revenues and profits until 28 estimate, okay?
Energy storage, solar.
Well, no, well, those do. So here's the ones that are not generating revenue until 2028, okay? It's this Optimus humanoids, it's robots, okay? It's Dojo supercomputer, and it's fully self-driving. So those other ones are. And so I guess the point, and I think this is what kind of Danny's getting to, is if right now it's a car company, you know what I mean? And it's fine that if people believe in all those other advanced technologies, and Elon is the one to push those forward. And he probably is the one to come up with the best robot or come up with the best supercomputer or whatever. But right now, if you were paying $600 billion, or you were paying, to Guy's point, in late 2021, $1.2 trillion in market cap for that, there's a lot of things that have to go really well. And most of which, the adoption for electric vehicles here, you need to keep to maintain share and grow share and make it more profitable, but then you need to be able to do what they hope to do in China. And so right now, just the competition and the pressure on pricing and their inability to kind of create the sort of elasticity that they thought they could do by the 6 price cuts over the last, call it, year and a half now, it's not materializing, And so to me, I still think it's, overpriced. I don't have a position in it. Every time we see Danny on the show, he comes and says, listen, I do think it's a short, because right now, it is just an EV car company with a lot of competition.
Just for the record, I was planning to be on the show prior to Tesla being down, prior to the market being down. I tend to find myself on here from time to time when that does occur. But I do think, like I said, I do think for now, it looks like an auto company to me until all these things are on the gum. So.
Let me ask you, how long have you been short Tesla?
Off and on for 5 years, 6 years.
Have you made money overall?
I think I'm
Good question.
very close at this point. I mean, I was down this year. It had to.
Okay, so he has lost money. He just basically admitted he's lost money going against Tesla for the last 5 years. They always. Oh, man. That's a good question. Thank you for her asking that. Good freaking job, Melissa Lee. Good freaking job.
It being down. I tend to find myself on here from time to time when that does occur. But I do think, like I said, I do think for now, it looks like an auto company to me until all these things are on the gum. So.
Let me ask you, how long have you been short Tesla?
Off and on for 5 years, 6 years.
Have you made money overall?
I think I'm very close at this point. I mean, I was down this year. It had a nice move down. I didn't take enough off the
This is the time.
This is it. This is it to me, because I don't know why it's the Magnificent Seven anymore. So they're out, as far as I'm concerned. You look at the 7 companies that we talk about, I think it's SEAL Team 6 on Veterans Day.
Well, that's fitting.
SEAL Team 6.
SEAL Team 6. I think they're out because it's an auto company. We are what we thought they were.
See, Danny, that's why we have money. Comes up with clever things.
Right.
Who's Dan's favorite band? Do you know this off the top of your head?
His favorite band.
You should know this because we played the music.
All right, his second favorite.
Pearl Jam.
Pearl Jam. It's Somebody's in Your Ear. And before we started, we heard the song Black, which is, by the way, probably the only song you need to listen to. I mentioned that because Gary Black, who was on this show.
Yes, he was on
a couple weeks ago. See what I did there? That's how I tie it all together. He put out a tweet talking about how if you back out Dojo and Optimus and FSD, you get $90 a share in terms of the value of the E.
Somebody said, imagine 5 years of shorting and not learning your lesson. There's always an obsession when it comes to shorting Tesla. Like, you want to hedge against Tesla because you got a bunch of shares like I do. Okay. But yeah, straight up shorting, just banking that's going to go down is always a tough decision. But this is interesting. $90. What are we talking about here?
See what I did there? That's how I tie it all together. He put out a tweet talking about how if you back out Dojo and Optimus and FSD, you get $90 a share in terms of the value of the EV business. By contrast, they have it valued at $300. This chasm continues to grow in terms of where people are. And my sense is a guy like Dan Ives, who's been, the axe in the space, he's going to sort of come out with a bull case in terms. It would be great if we could have him on and talk about Tesla.
Oh, so they're going to bring on Dan Ives?
But I do want to ask Danny one question before we move on to this. It's 209 right now. So at what price do you say, you know what? I've made the money. I'm good.
Where do our companies trade right now, Guy, on a multiple basis? Listen, I know we're going to talk to Dan in a second, but I think if it gets back below 100 or towards 100, I'll probably take some off. But I think it's going to $50.
No, look.
Oh!
I can make a bet.
Oh, shit.
Does the world collapse around
my. He says Tesla's going to 50. Oh, my gosh, he's back on the chicken gang. Like Chicken was calling last year. Chicken was saying Tesla's going 50, Tesla's going 60. Oh, man. Like, dude, you get Tesla back down to 100 somehow, and I'm not very convinced Tesla's going back to 100. 150, I think, possible. Under 100, I think is very low probability. But if you get that, cover. Like, don't bank on Tesla going to 50. Like, you know, there's a point between like what's possible and just straight up crazy greed.
I know we're going to talk to Dan in a second, but I think if it gets back below 100 or towards 100, probably take some off. But I think it's going to $50.
No, look,
$50.
I can make a better. Listen, okay, and I've been.
Does the world collapse around it as it goes to $50?
Yeah, that's crazy. Okay, Tesla's 200 plus. From right now, that's like a 75% drop. Math. 200 plus to 50, 75%. Damn.
Around it as it goes to $50.
Say it with your chest.
I've said this whole cycle.
Say it with your
We'll know
chest.
that the market's corrected when Tesla finally caves, when Tesla finally gives in. I have nothing against it. I just think it's being valued incorrectly. I think it's an auto company.
Listen, I think it goes back to what I was saying about those other parts of the business. Like, again, I think if it goes down to $100, which it was trading at in January, it's probably a buy there. You know what I mean? You weren't pressing it at $100 in January. I wasn't, but I started when it got back to like 140 before that Q4 print in January. And I think the most important thing, every quarter that they have reported this year, the fundamentals have been deteriorating. It's that simple. So like, there's no reason to be buying it.
Even saying it's going to 100, it's a big statement. I mean, it's a big statement, right? Going to 100, we're talking about that's 50% plus downside from here, right? And that's with Cybertruck about to ramp big next year. And rates likely peaked. I don't know, man. I don't know if I would go there.
There's no reason to be buying it here. There's going to get lower levels.
Clearly, 4 out of 4 of our traders tonight are negative on Tesla, so we had to bring in a pinch hitter here to play the bull. Our next guest has a $310 price target on Tesla. That is nearly 50% upside from here. Let's bring in Wedbush's Dan Ives. Welcome back, Dan.
Yeah, great to be here.
Good to be here. It's great to have you. Should it be kicked out of the Magnificent Seven? Does it go to 50? I mean, like, where do you start?
I mean, I think 6 to 9 months from now, the stock has a 3 in front of it. In terms of things back to.
Damn, he came out swinging with a haymaker. He says 6 to 9 months the stock has a 3 in front of it. And he says it's going to 300 plus in the next 6 to 9 months. He came out straight through a haymaker at their head. Oh my gosh.
300 as ultimately. I believe this is more of an air pocket that we're seeing from a growth perspective. I think margins start to trough out. And going into next year, I think numbers conservative. And the sum of the parts, as Dan talked about, I think when you look at battery technology, FSD, autonomous, I could argue it's probably one of the best AI plays out there. To me, this is more of a table pounder opportunity rather than time to hide in the cave.
Can it grow? Can it gain market share? Can it achieve scale if China?
I mean, that is the divergence of Tesla right now. Right there. That is a freaking divergence of Tesla right there. One guy says his baby's going to $50, 75% down. Another says it's going to 300 plus in the next 6 to 9 months. Holy smokes, there's no dang jokers. Woo.
If there are issues in China, I mean, if Li Auto is really, I mean, it had a very good quarter. It reached 100,000 units. That's the point when Tesla started making it work, 100,000 units. And it's at that critical mark now. So maybe it's poised to sort of, really win the market there.
Yeah, look, you raised great points. Moses, obviously raised great points. I mean, I just got back from Asia. I was there for 2 weeks. I mean, in my opinion, the China story, the cuts they've done, that's the strategic poker move they needed to do. No doubt, demand softened, but I do believe we're starting to see some equilibrium where I look out into next year, you look at 2.3, 2.4 million units, 40-50% of that needs to come from China. So to your point, no doubt, China is the hearts and lungs of the Tesla growth story. But it goes back to, look, the bears have hated this. If you go back 5 years ago, 3 years ago, I get it. They view it as an auto company, as Dan talks about. I view it, and I've always viewed it as a disruptive technology company, which is why I view the sell-off here and a lot of the hate as more the opportunity to own it, rather than the time that there's some sort of, fire in a crowd theater.
No hate here, all love. But you know what? I think Elon Musk doesn't love the fact that interest rates have been going higher. He made a point of talking about it at length a couple of weeks ago. How important is the bond market to the Tesla bull story?
I mean, look, Musk called it out. And then again, it goes back, like, that was a disaster conference call. We talked about that, just the way that was handled. Yeah, of course, it's very important because the price cuts, essentially nothing even happens to that relative to the consumer. And I think, as Nathan's talked about, ultimately, you need to see that come down.
This Dan Ives, he had to play football. He had to play football growing up. Only football players call everybody by their last names. I mean, he just called him, instead of calling him Dan, he calls him Nathan. He called Danny Moses. Like, that's a football thing, and you call everybody by their last name rather than their first name. Like, that's the only place I've ever been in my 33 years on this earth where that's what you did. You called everybody by their last name. You never called somebody by their first name. So.
Calm down.
Oh, somebody says also in the military. Okay, so the military, I wasn't in the military. So I guess in the military and football, those are two places you always call people. And I played so many other sports. No other sport people ever called you by your last name. Basketball, track, anything like that. Like nothing. It was always first name. But football, always last name.
Calm down. You need to see the China story stabilize. You have a lot of competitors come from all different angles. But if you look at Lucid and others, it's very hard to scale, and I think it just continues to come down. It is still Tesla's world, and everyone else is paying rent in electric vehicles.
So if you look at the gross margin part of the story, where do you think that's going, and what do you think is a right multiple, at least to think about? You say it's a disruptive company on many fronts, but the auto business alone. How do you think about that?
So I think from a gross margin perspective, I think it troughs out over the next quarter or two. I do believe.
Somebody says, I played football and was in the military for 11 years. I absolutely hate when people call me by my last name. I kind of agree. I was the same, but for me, it was because my last name was so complicated. So everybody always butchered it or called me something that wasn't really my last name. And so I'm kind of in your. I loved when I got out of football and then I started doing track, and the coaches and everybody called me Jeremy instead. Because I was like, got so sick of people butchering my name over the years and then just making up whatever they want to call my last name. So
that's in the rearview mirror. And I look from an odd. If you actually look at the EV business, I think the EV business is worth $250 to $270 per share.
Oh.
Then you start to look at the sum of the parts, the battery technology, FSD, and what I view as the supercharger now, with them essentially being de facto in the U.S., that's another $30 to $40 per share. That's our view as a disruptive tech company, not as an auto company.
Dan, let me ask you a question. How patient are investors going to be? A lot of the things have been on the come for a long time, right? And so CFO resigning, to me, has been there 13 years, kind of got passed over. It's not a big deal. I don't know what your thoughts are on that, but to me, when you see something like that occur, I'm not saying there's anything nefarious.
People made a big deal about when the last CFO left.
Corporate governance and so forth. At what point, if the economy does start to slow?
The Bears made a big deal when the last CFO left. And then the new kid, we'll call him, took over. And then they're like, this guy doesn't know what he's doing. He worked at whatever position in Tesla. And now if they lost their CFO, they're screwed. And then the company still beasted after that. And so now that guy left, the one that they said, he wasn't the right guy for the job and he couldn't do this, couldn't do that, and he wasn't the last CFO. Now they're making a big deal about him leaving? Come on, man. Come on.
The economy does start to slow away from Tesla, which they're going to be impacted by, which Musk has said rates are hurting. Are people going to say, yeah, you know what, Cybertruck, maybe they're not going to deliver as many. Maybe the sentiment turns. I just feel like we're going to hit one of those air pockets.
Yeah, and to your point, Zach leaving was a gut punch to the credibility of the Tesla story, because he was one of, especially from an investor perspective, many relied on him leaving. There's definitely a void. I think he even saw that on the conference call. But it comes down, Cybertruck, November 30th hits. You want to start to see vehicles actually delivered. Can you deliver? Okay, we talk about 200,000. Can you deliver 50,000? Can you deliver 75,000? What that does.
The person that asked in the chat, Trey said, how do you pronounce your last name? Well, in French they say Lefebvre, but I just say Lefebvre. Simple, like L-A-F-A-V-E. It's obviously not that. It's Lefebvre, but we'll say Lefebvre.
It's the drum roll. You need to see a sub 30K vehicle come. That's going to be built out of Mexico, and ultimately probably another vehicle that comes out later next year. So these are important parts of the story. And I do view it's a little fork in the road time, but we've been there before with Tesla. And I view this, it's a bit white knuckle. And you'll see, like today, many kind of, I think you're definitely seeing the sentiment right now nervous. But I believe you sit here 6-9 months now. This is more of an air pocket than the time that this actually starts to cascade.
So Dan, we haven't been here before. So if we're going to go from their expected 1.8 million deliveries this year to 2.4 next year, you just said 30 to 40% of that has to come from China. They have 10% market share in China. So they have some local manufacturers are eating their lunch at a time where China's putting export restrictions on graphite, right? Like the list goes on, and we haven't even had the recession, to Danny's point here. So my only point is that they may not do in China what they did here in North America or Europe, and that blows a huge hole through the valuation story because they've spent so much time and energy really setting up to get to 50% market share or whatever, and they're never going to get there in China.
Yeah, me and you've talked about that before, and that is, I believe, that is really a key to the bull-bear story here. We believe China, they're actually going to be able to gain share. I think the price, you're seeing stabilization there. I do believe from a scale and scope perspective, it gives them significant efficiency, especially from battery technology, that's going to be important even from a margin perspective, 25, 30% higher margin for every car they sell in China versus US. But it comes down to back's been against the wall before in China, and I believe this is going to be a prove-it story, that they're going to be successful on the other end. That's our view, and that's been key to the bull thesis. Look, when you look at the China story for Tesla, for Apple, that's always sort of been the albatross that you're fighting.
This is the last one. We're going so long, but in terms of China, in terms of how much of the stock is China, do you discount that at all for geopolitics, given where we are right now?
Look, and again, just getting back from the region, it's definitely clearly a nervous period, but I do believe, at least for right now, contained. I mean, I think there's some that's maybe in the stock, but if I look how it actually plays out, unless there's a further black swan event, at least for right now, bark's worse than the bite. And that's sort of been our call on Apple as well.
All right. Dan, thanks for coming by.
No, thanks for having me.
Dan Ives, Wedbush. All right, so we're going to goodbye the guests, even though they're sitting right here.
Can I just say one thing before?
Yeah, they're like, okay, get the fuck out of here so we can talk some bullshit. Get out of here, Dan Ives. Get out of here.
His wardrobe, ridiculous. I mean, it's in a good way.
Bullish.
Salmon, and he's got
Do you like his fit? That's what the kids are.
fantastic. Anyways, I'm sorry about that.
So even while he's sitting there, I'm going to ask you, what is a part of the argument that you disagree with the most?
In terms of
the bull case,
stabilization. So stabilization in China, and again, these price cuts. I do think if the margins are the story, you're going to have to make up for it in terms of the demand's got to be there to offset declining margins. And I'm not sure it will be in terms of the consumer going forward and with interest rates where they are and where I think they're going to go.
All right, let's get to the markets now.
Wow.
The S&P and NASDAQ's long winning streaks coming to a...
That was a good piece. I'm going to likely do a full-blown reaction on the reaction channel in a little bit on that. You guys got to see at first my live reaction, my more unprofessional reaction. On Twitch, I'm the most unprofessional version of myself I can possibly be. But anyway, so looks like Win closed out after hours down about 5%. Unity closed out after hours down about 15.5%. Don't be surprised if you see a 20% plus move down tomorrow, especially if it's a bad day in the market. Google employees typically work more than 8 hours a day. Random. Trade Desk finished out after hours down roughly 30 percentage points. What a absolute brutal move down there in Trade Desk. Wow. And then Canopy was up slightly. Aurora was up a lot. So appreciate you guys joining me. Anybody that's left here, the 100-something of you guys, thanks for being here. Next week's a big week of earnings, a lot of retailers. Next week is going to be very important because everybody's got questions about the consumer. How's the consumer doing? How's the consumer doing? How's the consumer doing? We'll find out. Retail's usually going to tell you how the consumers are doing or not doing, right? So, anyways, guys, appreciate you joining me. Much love as always. I'm going to react to that same clip I just did there on the reaction channel here in a little bit and maybe give a little more in-depth thoughts. So appreciate y'all. Much love as always, and peace, and have a great day.